Why is no one talking about this Dividend stock? You guys, I gotta share this one with you, and you already know the drill. Let's get it.
Ooh, big bag. You not talking money, you can miss me with the chit chat. I'm not with the rah-rah or the...
What is up, you guys? Welcome back to my channel. Nikki here, and in today's video I'm going to be talking about a dividend stock that I literally have not heard anyone talk about yet before. Quite frankly, I'm not sure why, because from my research it looks pretty good, and I'm going to obviously talk about the numbers and why it makes sense, but I also love to talk about the business and my thoughts on that given our current state of affairs. And always remember, guys, you are investing into a business, into a product, a management team, so that all goes into, you know, the PE ratio, the dividend, all that stuff is important, but you're investing in a company, and always remember that. But let's dive right in, okay? I'm not wasting no time, you guys. This one's going to be VF Corp, ticker VFC. Now, Nikki, what do they do? Well, they design, produce, manufacture, market, and distribute lifestyle apparel, footwear, and other related products. And you might be trying to click off the video already, but hold on a second. Yes, it's consumer discretionary. Yes, we are in weird times with inflation and money being a problem for a lot of people right now, and this may not be on a radar for someone to invest into because people don't have extra money to be spending. But I'm gonna get into later in the video why I still love this option, okay? So just bear with me. They own iconic brands that have honestly been around ever since I can literally remember going shopping. Brands like North Face, Supreme, Timberland, Dickies, JanSport, Vans. Here's a good one for us dividend investors. They're not only a dividend aristocrat, they're coming up on king status. They've been paying and growing a dividend for, drumroll please, 48 years. And let's check this out right here. They're in over 170 countries. They're over 122 years old. They're founded in 1899, and they're about $9.2 billion in revenue. But here's actually what I really enjoy about this and what made my eyes kind of open for this whole business thing, okay? Check this out right here. I love this graph, this breakdown of the revenue. So you can see by channel, by segment, by region, and by business. So you can see that outdoor and active are literally basically 50% of this business, okay? And that's going to be an important factor I want to talk about. But also, if you look at my business there, you can see that Vans, North Face, and Timberland make up majority of their business. So even though they hold these other pretty big name brands, those three are the top dogs. And quite frankly, I'm going to touch on the North Face thing here real quick along the outdoor 45% of the business. And I think it's crucial. So hear me out on this one. Now, it's no secret that 2020 absolutely 100% without a doubt, period, has changed the way we're living our lives. Now, without going down a rabbit hole of good, bad, or indifferent, we know it's something that is happening. And we also know that in the year 2020, people began spending way more time outdoors because we could only stay locked in for so long. So people started getting their families together. RV sales went through the dang roof. People started taking trips, camping, going to the mountains, doing all that outdoor fun activity. But however, we're now in 2022, we're kind of going back to normal. But what's normal? I mean, people are changing the way we do things, okay? Work, for instance, I saw a poll. I mean, there's a lot of polls going out there, and polls are whatever. But I did see a poll, and it makes complete sense to me on LinkedIn, that 59% of workers and employees now, if their job does not offer at least a hybrid solution for work from home and office work, they're finding another opportunity. So for me, these habits and these things that people realize in 2020 are very important to them, and people are starting to prioritize their happiness, their health over going into an office to work. And if you're a company and not adapting to that and listening to the people and providing work from home options, you got to go. So that's why this consumer discretionary company actually makes me feel okay, because bulk of their business is outdoor. Bulk of the brand that they sell the most of is North Face, which relates to that outdoor. Okay, I don't know what this is, but is outdoor. And people are not giving up and sacrificing these things anymore, which makes it feel like it's more stable than a normal discretionary that can be a little bit of a roller coaster ride, and with hard times, people don't spend as much. But this one alone, I think, fits into the category of safer because of these kind of things. The other thing I love about this is their top two brands are North Face and Vans. And when they acquired both of these businesses back in the day, they got them for pennies. And then they put some magic dust on there. They did their thing. And now just those two brands make up over half of their revenue in their business. And if they have an eye for that and a knack for that, and they can do that with other brands and acquire other brands underneath their name and do the same thing, I honestly really like this as an investment because I really think it's not looked at. It's very undervalued right now, but I understand we are investors, so we have to look at the data, the numbers, you know, get the math right. But let's check it out right now. I'll pop it up on the screen for you as I talk about it. Here it is. Here's VF as of recording today. It's at $53.91. If you can see here, the last 3 months though, like, ooh, it's down almost 30%. That's why I said this is a good pickup. I think personally, just in my opinion, obviously don't sue me. Okay, don't come at me like that, okay? We scroll down here, we can see that the dividend yield's almost a 3.7%. The PE is looking good. Look at that 52-week high is almost 91 bucks. That's very promising. But the dividend, you guys, the dividend is so promising. And at the 3.7 rate, it's about 50 cents per share per quarter. The payout ratio is only 56%, which is absolutely beautiful. And I was looking at marketbeat.com and a couple other sites, and a lot of analysts are predicting this price to be fair valued around $79. So it gives this potential upside of 47%. And that's not even including dividends. That's pretty nutty. And 30% down, I think it'd be a great pickup right now. And quite frankly, a lot of things are a great pickup right now. We're in some trying times. We're in some weird times. The market has not been ideal. It hasn't been great, but you already know for us, hashtag dividend life, we like red market days. We get to pick up great companies at discounted prices, and I think this might be one you want to add to your list. With that being said, do you guys agree with me? Do you disagree with me? I haven't heard anyone talk about this. Maybe it's for good reason. Maybe I'm being an idiot, but I just really like the concept. You guys already know when I look at an investment, I look at a company, I look at that business. I look at where we're at right now, where I think we're going, what could affect that business, and it's very important that you do that. Let me know down below what you think. If you're curious as to why I feel like you should stop investing in growth stocks, especially right now, go ahead and watch this video right here. You guys, you already know if you made it this far, I absolutely love you. And you guys already know I will see you in the next video. Bye, guys.